what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Oh, didn't see you there. Good morning. Welcome to the morning show. Spencer Israel, JC Parets, Steve Strazza. Good morning, everyone in chat. I see you. Hello. How are we doing on this beautiful Wednesday morning? What could be better? We have charts. And more charts after that. So it's going to be a great show. Today's guest, good slate for you. We'll have Kimmy Sokoloff, as always. Our featured guest, Adam Kosh, president of Libertas Wealth Management, will be on the show in around 20 or so minutes. And then our new recurring segment at 9:30, Mornings with Mary. Very excited to have Mary on the show today. All right. Smash that like button, hit that thumbs up. Let's get JC, let's get Strazza, and let's go.
Good morning.
How are we looking, team?
Good morning.
Hey, guys.
Oh, just doing a little charting. Taking a tennis lesson this afternoon. No big deal.
How's that been going? You getting better?
I couldn't get any worse. What did I tell you yesterday? We're talking about the Intelligent Investor, Chapter 3.
Show some charts. Show some of the charts.
Chapter 3. All technical analysis is Chapter 3. Ben Graham, the inventor of value investing and fundamental analysis, closet technician. Closet technician.
Just curious. I'll have to check it out on my own. But what's he saying about the charts?
Well, these things about asset prices and how they trend that he explains so eloquently.
You're kidding.
Yeah. I mean, listen, good for him for being a technician. Maybe that's why he was such a good investor.
But
we always talk about how Warren Buffett definitely has a technician working for him.
A technician in the days of being a technician, it wasn't so easy. You had to chart this stuff by hand.
That's right. This was in those charts going, this was written, this goes back to the 50s? Yeah, right?
I don't know.
Yeah, 1950s? No? All right.
I got to get a copy and check this out now. You have piqued my interest.
Well, and just letting you guys know, just a little diversified there. Just checking out a little Intelligent Investor action. Mostly just to prove to everybody that Chapter 3 is all technical analysis. Sorry to break the hearts of the funny mental people, but it's just what it is. Don't hate the player, hate the game, son.
Did you know that or hear that, and that's why you bought the book?
No, I've had the book forever.
Okay.
Yeah, I mean, listen, it's I have a lot of books that might not. I have the Alchemy of Finance. I own that one too, from George Soros. I mean, I've had that book for 15 years. I've read a page or two.
Another one.
I'm one of those people that have books that I feel like I'm just gonna learn what's in it through osmosis. But I have a lot of books, and I like to, I might not read the whole thing, but there are certain chapters like Jack Schwager, one of Jack Schwager's books. It's not one of the Market Wizards. It's one of the other ones, something like Up and Down. There's 2 or 3 chapters in that book that is all about efficient market hypothesis, or the lies that were the efficient market hypothesis. And that alone is worth it. And I own that book, for example.
What is your favorite unlikely book? What's a book that, you really like, that, people wouldn't expect JC Parets to, have or read?
It's a good question. Something that I really enjoy that kind of gets you a little bit, catches you off guard. I really like all those 2008 books, all the crisis books. When the Roof Caved In by David Faber, excellent book. It's all about the real estate bubble. Larry's Bailout Nation, of course. Lehman Brothers, A Colossal Failure of Common Sense.
Yeah.
Those are not so much technical analysis books as they are the story of what went down during that period, which I traded every day and lived through. But for those of you who have not, highly encourage you. Those 3 books are great. I read them back to back to back. I read them in 2009, actually. And I've read a little bit of each of them ever since. But again, Bailout Nation by Barry Ritholtz, When the Roof Caved In by David Faber, which is a nice little short little beach read, and also the Colossal Failure of Common Sense by Larry McDonald, which is, by the way, like in 120 languages. So if you don't speak English, that's no excuse. And there you have it, Spencer. What do you think?
I think that's great. Joe in the chat says, once again, Strazza's shirt game is on point today. So I totally agree.
Center point. Giancarlo had these made. Really cool.
Fancy. Fancy. You can almost read that there's even letters there.
These were not custom made, so he literally bought them and then threw the logos on. So yeah, he did.
I see. All right. We have Adam joining us in 10. So let's get to state of the markets here.
Little state of the markets action. All right. Well, just a little state of the markets. The correction and the corrective action in markets continues during what is historically a time of not just the year, but the overall 4-year cycle when stocks should be struggling. So in a similar fashion to how stocks did so well in the fourth quarter last year, first and second quarters this year, they were supposed to do really well. So anybody who is surprised at how well stocks did the last 3 quarters is somebody who hasn't studied history, someone who maybe doesn't believe in math, maybe somebody who looks at their charts upside down. I'm not sure. But if the market would not have done as well as it did the last 3 quarters, that would have actually been very unusual. The fact that it did well is just perfectly normal as far as all cycles are concerned. Now, however, is the period of time when stocks are supposed to struggle. And what do you know, Strazza? Stocks are struggling, and they really have been over the last month or so when the new highs list peaked. And again, if stocks weren't struggling in this period, that would be unusual. So the fact that stocks and the indexes are having a hard time progressing is perfectly normal. Anything not this would be very unusual. So the question is not, is this a market correction? We know that it is, and it's coming at a perfectly logical time. The question to me is, how severe is this correction? Are we entering a new bear market? Is this, in fact, 1987 all over again, like I keep being told? I don't know. My crystal ball's in the shop. Why don't we dive in and see what sort of indicators would lead us to believe that this is more than just a run-of-the-mill correction, just a normal digestion after, by the way, the greatest first half start to the year in the history of the NASDAQ. So some consolidation is well deserved here.
How about these credit spreads? I was looking at these yesterday.
Yeah. Not much of a spread, right? Not much of a spread, which is interesting, So there's 3 charts here. Let's start with the one on the top. We're looking at high yield bonds versus U.S. Treasuries. So this is an easy way to represent credit spreads. If there's real stress in the equities market, you're going to see it in credit. That's just the way it is. The bond market is a real market, right? Like there's, the biggest institutions in the entire world that are bullying around the equities back and forth every day. They are a slave to the bond market. Let's just say that. So nevertheless, if this was going to be a severe market correction, if this was going to be something that's going to get progressively worse, you're going to see that black line on top dipping down, right? Rolling over. We haven't seen that at all. In fact, I'm actually pretty impressed at just how narrow credit spreads have been. So as that line is going up, that's high yield junk bonds outperforming U.S. Treasury bonds, which is an indication of a lack of stress. When that line is falling, that means those credit spreads, the yields between high yield bonds and Treasury bonds, guaranteed government bonds, as those yields widen, that's evidence of stress in the credit markets, and that it likely means that stocks are under pressure. That's what that means. How did I do there explaining that? That was pretty good, actually.
You did great.
It's almost like I've explained that before.
Yeah.
Because it can get confusing because, you're talking about the bond prices as opposed to the rate spreads themselves, so you got to flip it upside down. So a lot of double negatives, right? So I thought I did a pretty good explanation there. Adam Kosh, I see him in the green room. Pretty legit. Adam Kosh, first time on the show, which is a little bit messed up that it took him this long to get on the show. I don't know whose fault that is. That Adam's fault or Spencer's fault?
Yeah.
We'll blame Spencer. We like to blame Spencer for things around here.
Okay. Slow down a second.
Okay.
This HYGIEI base looks a lot like, the base in small caps or some of these stock market indexes, huh?
Yeah. Honestly, I'm impressed. And then see, Free Lee agrees that it can get a little bit confusing. It can, because of all the double negatives. But at the end of the day, you've got the riskier, more risk-on asset as the numerator, and the more defensive risk-off asset as the denominator. So think of it like that. So as the line is going up, that's evidence of a healthy market environment. As that line is going down, that's evidence of a deteriorating, weakening environment with more stress and credit, which tends to come during more severe corrections, not just a run-of-the-mill normal digestion of gains, which so far all indications are that it's that, right? Not 1987 all over again. Second one, again, a risk-on asset in high beta stocks versus low volatility stocks. Again, if money is flowing out of low volatility, more defensive stocks and into the high beta names, again, that tends to happen in healthier market environments. So if you start to see that bid in low volatility, in other words, that blue line in the middle starts to roll over, again, that's evidence of more stress. We actually haven't seen that at all. And quite frankly, I'm actually a little bit surprised that we have not seen any rotation at all into the high beta names. Let me see. Let's see. If we got anything yesterday, not really. Haven't seen much at all. So all lies there. And then the consumer discretionary versus staples is actually very similar to the high beta, low volatility. Consumer staples are an example of low volatility stocks. And again, and then consumer discretionary, much more risk on. So this is, where consumers spend their discretionary income in things that they want versus where they spend their income on things that they need. So this is a wants versus needs ratio. Wants being automobiles, cruises, buying new homes, spending money in retail. Like those are things that you want. Things that you need: toothpaste, toilet paper, laundry detergent, cigarettes, alcohol. Those are the needs, if you will, of the U.S. consumer. Like it or not, right? Booze and cigarettes included in that list.
Offense versus defense, right? All of this.
Offense versus defense. So, you're gonna see these lines rolling over if this is in fact 1987 all over again. I say that tongue in cheek because I don't think it's 1987 all over again. Far from it. I would encourage you, the more people yell about 1987 and 1929 and then just further away you should run from those sorts of people. Those are the extreme outliers, not the norm. So if you are wondering if things are going to get bad, I would take a look at these. And then just a couple of charts quickly. We lost financials yesterday. That was a big one. So that's a feather in the hat for the Bears right there, losing financials. And I'm not saying that this is the end of the world and financials are going to completely collapse. But this is, I think the Bulls need a swift recovery in financials, or this is likely going to take several months, not just a few weeks. Similar action in industrials, by the way. Take a look at the industrials, the XLI, perhaps losing industrials. Again, these are very short-term charts, so keep that in mind. These are daily time frames. So just in the short term, things are not getting better. No, in the short term, things keep getting worse.
And it's more than that too, right? Like not only was it a particularly bad day, one of the worst day since March for financials, right? But these are the groups that we were looking to catch rotation, right, and hold the market up. These were the groups that we thought were getting some bullish. We're going to take on some sort of relative strength roll, and instead they are looking like this. So that's not good.
Exactly right. Now let's zoom out in the industrials. because this short-term weakness is happening at a critical juncture.
What
These
if
are
this
these
fails?
are the 2021 highs. What's that?
You don't want to see this fail and look like Apple, right?
Right. You couldn't have said it better myself. You don't want, or Microsoft for that matter. Failures here in industrials at these levels. I mean, this is a leadership group. You lose these, now you're getting broadening selling. And finally, last chart. Just to reiterate the point that our thought process coming into the back half of the year was that the indexes were likely to struggle. It was going to be harder to just throw a dart and make money. Any idiot could have made money in the last 3 quarters. Like, seriously, like any idiot could have made money in the last 3 quarters. You said it yourself. You're like, JC, I think I was saying something about like some gains I had in some stocks. You're like, JC, we're all doing well in this environment. Relax. I think you said something like that. And you were just breaking balls, but you made a good point there. Like it's less about like what I was doing specifically and more about the fact that any idiot could have made money in the last 3 quarters between the fourth quarter of last year and the first 2 quarters of this year. It was very, very easy. So my thought coming into the back half of the year is going to be much harder. Not every idiot can make money. And even though the indexes are likely to struggle for the foreseeable future, you're going to see huge winners underneath the surface. And a lot of these winners are going to make little or no impact on the overall indexes. CBOE is a good example of that. What's the market cap of CBOE? 15 billion or something like that? Might as well be zero. This thing can triple. It's almost 16 billion actually now. And it's not going to make a dent in the overall indexes. So just one example of the fact that some individual equities can do well. In fact, my bet is there are going to be some individual equities that are going to do very well in the back half of the year, despite the indexes struggling. So that my friend is the old state of the markets. What do you think?
I like it. You made some great points on your last point here with SIBO. I like IBKR, man. Interactive Brokers. Looks almost identical. I'm looking at the relative trend now, kind of sideways. These two stocks have more or less returned you the same over the past 10 years.
Yeah, but you want to know something? But you said it yourself. They look the same. Yeah. You look at that chart of CBOE, Interactive Brokers, IBKR looks exactly the same. Robbie talks about how most people probably lost money the last 3 quarters because of positioning. Right, good. Right? That means that's part of what drove stocks is the fact that hedge funds were so short. Right. You had all these perma bears, with their Twitter spaces, leading the sheep to slaughter, right? And anybody who listened to them instead of price, which is what was actually happening, got slaughtered. Yeah, no question. But
you had to be long to participate and to make money.
Historically speaking, it actually is a good idea to own stocks and be long during bull markets. Right. I don't know if you've noticed that over the years.
You had to own something. There was something.
All right. Here. Spencer Israel coming in. Any thoughts? Any thoughts? Questions? Concerns?
How about a comment from the chat? Ravi Gupta. Look at the 12-month candle of the indexes. I like Ravi's style here. Talk about zooming out.
Too long a candle.
That's a little bit, yeah.
Too long. I appreciate the enthusiasm. Too much.
I never look at anything beyond monthly.
No, I thought that was a really, really good analysis. So thank you for that. Because, we've been talking about the seasonality and how this is all normal, but the question, it's worth asking, what would have to happen for this to be not quote unquote normal, right? So that was good. Team Money, thoughts on Target? Yes, we do. We'll get to that in a minute. But first, let's bring on today's featured guest, Adam Kosh. He is here. Let's get him on the show.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, buddy.
Hey.
There he is, Adam. What's happening, my man?
I can't believe that I'm on this show. I don't think I'm important enough, guys.
Who do we blame for this taking so long? Is it whose fault is this? Is it Spencer's fault or is it?
I'm not gonna be the person to blame. That's on your front. That's gonna be up to you guys.
That's Spencer's fault.
Okay, there we go.
How's the world of financial advising in Ohio these days?
It's good. It's we've been seeing a lot of the things. Well, we're a little bit unique in that we are a financial advisory firm that believes very strongly in the irrefutable law of supply and demand and technical analysis. So we were saying a lot of the same things you were back in November, December when it comes to whether the market had bottomed. Obviously, we don't know it's bottomed until it's behind us, but we were feeling pretty good about that, and then kind of went heavy and long in January and February, and have been pretty happy about that since then. So the other story, I think.
Let me ask you this, Adam. How much pushback were you getting from your clients in the fourth quarter last year?
In terms of getting back in?
Yeah.
None, honestly. I was still hearing a lot of, I don't know if you two are going to find this surprising or not, but I was still hearing a lot of people concerned about politics. What I hear most of in our office is, what do you think is going to happen with the economy? What do you think is going to happen with the election next year? I don't hear anything about.
And are those people leaning Republican and they're just kind of a little bit frustrated with, or not really?
Yes, yeah. And by the way, it's every election cycle. It's just the opposite party, which is why I find myself a very proud centrist libertarian. Right.
So what is the concern politically?
It's
that their guy's not in the office.
It's typically that, whatever let's put it this way. I think that when we're working and we're busy and we have to do whatever it is we're doing at work, we have to go home. We have to take care of our kids. We have to, make dinner. Then we want to spend time outside. Maybe when we retire, I think what happens is you have all this time on your hands. And when you have all that time, you have to do something with it. And unfortunately, people spend more time watching TV. And when they start watching TV, they start watching things that align with their beliefs. And then when they watch that stuff, you end up. So if you're a Democrat, you're going to watch MSNBC, you're going to watch CNN, you're going to watch, whatever it is you watch. If you're a Republican, you're watching Fox News or Newsmax or whatever. And when you watch those things, it's just designed to fire you up. It's just, so what ends up happening is it's whatever.
My question is to these people, like, you're older, you should be wiser, more mature. Like, shouldn't you know better that is just poison to your brain? Like,
I think that if you
by
step
now
outside
in your age, like, don't you know that it's garbage?
I think if you step outside yourself, yeah, but I think that you I don't know. It's hard for maybe us to imagine at our ages here, but if we're 60 and we're not working at all anymore, I mean, we don't have to set an alarm. We don't have to be anywhere, go anywhere, do anything. I think it's pretty easy to find a hobby. And if you don't like playing tennis, and if you don't like, I don't know, playing cards or whatever your hobbies might be, then you find yourself watching the news and you just get engulfed in it. And they're very good at it. They're very good at, look at the financial news.
Guys, if that ever happens to me, can one of you two just come over, just put me out of my misery? Just end it.
Yeah.
I'm done.
That happening to you, I don't think.
Maybe if you move.
No,
to
listen,
Oregon.
I had to learn that the hard way, to turn the stupid TV off. It's garbage. It's poison. Yeah. When I really realized it is that I'm friends with some of the most popular people on all of these networks, right? None of them watch any of it, right? So when you have the most popular people that are on the most on these networks consuming 0.0% of it, including the segments that they're even on,
right?
If that doesn't tell you how bad it is, then I don't think it. Okay, great, fantastic. I love you, Adam. Great for you to be here. Nice little chit chat.
Thank you so much for having me on.
Let's get down to business. All right, here we are. Stocks did very, very well during a period that they were supposed to do very, very well. So, okay, perfectly normal. And now stocks are struggling during a period that they're supposed to struggle, right? Perfectly normal. So, now let's think about the back half of the year. How tactical are you with customer funds? Do you manage different portfolios? Like, how are you thinking about the back half of the year?
Yeah, my time frame is intermediate. So, I'll give you an example. Like, I'm looking at a stock like ASML, which if it doesn't hold above its 40-week moving average by the end of the week, I'm probably cutting bait. I'll tell you another one. One of the things I love about technical analysis in our community, when I say our community, I mean the three of us and everybody else in the TA community, is we love to talk about our mistakes, the things we didn't do well. So I have not had a single dime invested in bonds since November of 2021. And I decided to dip my toes in the water and went in pretty hard 3 weeks ago. And if you look at TLT, 3 weeks ago, you've got, I believe you could call it three pretty solid bottoms below a range, and then maybe a couple other soft ones. But I thought, if I buy here, and this thing runs, we've got a really good risk reward trade, and my maximum loss was like 1% to 2%. So I took the trade, we went in hard, and 2 weeks later I sold, and we ended up losing 1% to 2%, and that's where we are now. You look at TLT, you look at LQD, you look at I don't know, the only one we still own is EMB, emerging markets bonds, but that's an example of waiting for, that's how tactical I can get, I guess. When it comes to fixed income right now, I have a really hard time giving it much grace or time for that matter, because the rates are just obviously such a mess. But as far as equities are concerned, I always like to say the way we manage money, and you guys know this already, but we manage money using relative strength in terms of what we buy. And that's like, if you look at the NFL or March Madness or Major League Baseball, it's like investing in the playoff teams and avoiding the rest, and then just watching their win streaks and losing streaks to make sure you're staying with the leaders and avoiding the laggards. So right now we're invested in the leaders, we're invested in the playoff teams. Doesn't mean
then
we're
you
going to
wouldn't have had the Orioles.
That's true. That's true. I wouldn't have had the Orioles, but we're okay with that one team, right?
That's right.
No big
That's
deal.
right.
So no, I'm not going to get too tactical. I have prepared our clients ahead of time with podcasts and articles saying, look, August and September probably won't be great. No, we're not going to go selling everything we have in our portfolio in hope that the market goes down like we think it will. We're reacting on an intermediate term basis.
I like that. And then what about the back half of the year in terms of overweights? What are you betting more heavily on or less heavy on?
I mean, I still really like technology. I know that sounds crazy. I still like semis. I think that when you look at the market these days, and we've talked about this before, JC, but the technology sector and maybe even the semis could be, one of the new major leading, I don't want to call it an indicator, but one of the main things we need to be focusing our eyes on as technicians when determining whether or not the market's in an uptrend or a downtrend, as opposed to looking at maybe some of the more traditional old school methods. Because kind of like, I know you're famous for saying this, but you can't have a bull market without financials. I don't know if you can have a bull market without technology. If we're seeing lower lows and lower highs in technology, is it possible to have a bull market in the United States anyway? I mean, I don't know.
Not at the index level, but that's not going to stop energy stocks from going higher.
That's true story. Yeah, that's true story. Yeah, the energy is interesting. We were pretty heavy energy last year, and I got out probably late summer and haven't really touched too much since then. But I'm when you say what do I think about the rest of the year? I don't know. I mean, I tend to shy away from predictive.
Less about like what you think the S&P 500 is going to close at on New Year's Eve. Speaking of Baltimore Dolphins play the Ravens on New Year's Eve, that's cool. And more so like how you're thinking through asset allocation for the back half of the year, more so than what your S&P target is or whatever bullshit.
Sure. I mean, right now, I'll just tell you what we own right now. I mean, from a sector standpoint, I mean, we own materials, industrials, technology. Another one that maybe you find interesting right now, we own gold, and that might not be the case Friday. We'll see what happens. I want to see how.
Do you make a lot of on Fridays? Are you getting out of positions, getting into positions on Fridays often?
My process is, if I see a strong weekly move on a Friday afternoon, and it's big, I'll cut bait Friday. But if it's not big, if we're looking at 1-2%, I'll wait for the European close on a Monday till a lot of the volume leaves the market at 11 o'clock, and then I'll make my decision at that point.
How international of you. Very European.
You like that?
Is that your Hungarian descent?
Nice. Your memory's on point this morning. What time is it? What time did you get up this morning? Were you out walking with
Dude, I got 3 kids. I got twins that are 9 months old, and I got a 3-year-old daughter. There's no sleeping around here. I'm up bright and early. I'm up before the sun is up. Let's go.
We know that Morgan's doing all the work. Come on.
Bullshit. Daddy helps a lot around here. Come on. Ask Strazza. He knows. He was just here a couple weeks ago.
Daddy was playing soccer and helped out at practice.
Strazza came to my daughter's soccer practice.
Okay.
Morgan is the boss, though.
We know that.
We tell her that. We like to make sure she thinks that, right? You know how that goes.
Adam, what are you doing owning gold? Talk to me. What's going on there?
You're hanging out with gold. What I tell you about that?
Yeah, there's a club. It's a speakeasy here. It's all people who like gold. No, I'm kidding. It's
It didn't
I just
surprise me though.
There
no,
probably
no,
is.
yeah,
That club
it's like a Browns backers bar, but there's a little corner. There's a table where there's gold bugs.
Yeah,
Yeah,
old angry guys.
yeah. Well, Browns backers. What are you gonna do? No, I bought gold earlier this year. On what looked like a good setup, and so far, we're still net positive, but. It's one of those things. Either it's going to go up from here, or it's going to go down. We all know the fundamental outside effects that can affect gold, and I think that they're almost at a stalemate. If you picture it like a wrestling match, you got inflation, interest rates, the economy, and stock market, and I think they're all just pulling at each other, and it's just going nowhere.
Yeah.
So we'll see. We'll have to see what happens. It's not all that exciting. I mean, you mentioned food and beverage. We own food and beverage, the sector itself. We own semiconductors, internet stocks. Specific individual stocks that we own, Netflix, Nvidia, AMD, CGen. I'm sorry, not CGen. CGen got bought out. Meta, Marvell, if that's how you say it. Palo Alto, Broadcom, ASML, CAT, United Healthcare, Coke, Chevron, and Boeing. So,
So other than some of the food and beverage, staying away from staples, staying away from Utes, REITs.
Yeah, I mean, we don't have any. We have a very, very small position in staples, but no utilities, none at all right now. I mean, I have a feeling. Again, if you want me to get predictive, if somebody put a gun to my head, I have a feeling we're going to see probably a continued volatile, rough next 4 to 6 weeks or so, and then I have a feeling that we're going to see October kind of chill out, and then a strong fourth quarter. That's what I think we'll see.
Just following the seasonal trend.
Yeah, I think that's probably what we'll see. I mean,
Adam, the second stock that you just named was Nvidia.
Yeah.
I have to ask, what is it like for an advisor to navigate a situation like this? Are you being asked about Nvidia every other day? I mean, how do you navigate earnings and talking to clients about a stock like this? We're up over 200% this year.
I mean, I guess I just have to say I have great clients. I mean, I'm not saying that because I'm on a show here, but when you guys asked, am I getting a lot of questions about the market back in, say, October, November, and I answered saying politics. That's what I hear a lot about. When I say I hear a lot about it, I don't hear a lot. I mean, we're talking out of 300 and some odd clients, I'm hearing from 4 or 5. That's it.
Yeah, but you want to know something? That means that you're doing a good job of training your clients in terms of the process. And if anybody steps out of line, I mean, obviously you're there to service them. You're happy to talk to them. Do you find yourself firing clients ever?
Every once in a while. We haven't done it in a while. Been about a year or so. But every once in a while, yeah. Because what happens, and my world, I feel like my world is so much different from most of your guests. And then I think we're hitting the point here that you're kind of talking about is, you look at Nvidia. Nobody's asking me about Nvidia. People look at their portfolios in my office. They want to know if they're up or down. That's it. That's all they care about. Are you making me money? If so, great. And if not, why not?
Yeah, but
go ahead.
That blows my mind that clients aren't asking about AI stocks.
No,
because he does a good job of training them. So if his clients are asking about AI stocks, it's the wrong client, right?
I will say we've had a couple clients that'll say, "Hey, what do you think about AI?" But it's more like they heard something on the radio on the way home from work, or we had two people last week ask, "Hey, what do you think about crypto? Or do you guys do anything with crypto? And where do you see it going in the future? Do you think it being a viable investment or even a new asset class?" And so,
but those are legit questions. It's not like that doesn't make them a bad client. Those are legit questions.
Yeah, absolutely.
No. So that's a good job. Good job that you do there, Adam. All right. Sorry, I always steal all the questions when we have a guest. So Strazza, ask away.
No, I mean, we could talk more about Nvidia. This stock's crazy.
Yeah.
I think we're going.
I love it. I mean, I think it's a great stock. I mean, I don't know. People hate stocks that go up that they don't own, right?
Yeah.
Everything's a bubble if you're not in it, right?
Yeah.
This one's been hard to get into, though. No,
it's hard. Yeah.
I have a question for you, Adam. What about the geography sort of bias by you? You know how like in the Northeast around New York, customers tend to want to be more in like financials and things like that. In California, investors kind of lean more towards like tech. In Texas, they're leaning more towards like energy stocks because either their family, they think they know something more about energy. Kind of like in the Midwest, maybe west of you, Michigan, Illinois, you get like that industrial machinery sort of mentality. What about it like in Ohio? What's the geography bias there?
Well, first of all, in Central Ohio, we don't talk about that state up north. We don't even mention their name.
Right.
Aside from that,
You guys right. Yeah. The Battle of Toledo.
Toledo. There we go.
It goes all the way. It's before football.
It goes back to the territory. I know.
That's right. That's right.
Smart
the
guy.
beef started long ago.
Yeah. If there's time, I'll tell you about why it is the Ohio State players started saying the Ohio State University. There's a real reason for that, by the way. But anyway,
I don't want to hear about that team. I'm not interested.
Yeah. Okay. That's fine. Yeah.
We bleed orange and green around here, Adam.
People like local stocks around here. I mean, they like their Cardinal Health headquartered here. Wendy's is incorporated here. Worthington Industries, Scott's Miracle Grow.
Wendy's is in Columbus?
Yep. Mm-hmm.
No kidding.
I drive by it twice a day. Yeah. Scott's Miracle Grow I mentioned. Big Lots. What else?
Have you tried the pink frosty, the strawberry frosty yet?
No. No. I'm not a big person on sweets. My problem, JC, is chicken wings, mac and cheese, and pizza. Those are my three problems.
Chicken wings, chicken wings aren't bad for you.
That's air fried chicken wings. Yeah.
They're okay with you. It's the pizza and the mac and cheese that'll kill you. What about the Jameson? That'll kill you too. Right?
Yeah. There's the Jameson. Yeah, we're not talking about what we wash it down with, I suppose. But yeah.
Right. When are you heading back over to New York?
I probably won't. Probably not until spring when I see you guys again at the conference.
You playing golf these days or what?
No, there's barely.
I don't know if you heard. I'm quite the golfer.
Are you?
No.
Oh, I was gonna say. We even have a membership we bought for the kids this last 2 years, and I think I've played 4 times this year. So I guess the good news is we're having a record year at the office, but at the same time, there's not a whole lot of time to do anything else. So, but yeah, it's
how about the Hungarian Tokai that I told you to drink? Are you drinking that Hungarian Tokai?
I loved it. Donna thought it was crazy to drink a dessert wine with key lime pie, but it worked. I liked it.
I've given this a lot of thought over many years, Adam. I'm never going to let you down, buddy.
You're Somalia, that's why I'm texting you with pictures of menus all the time.
That's right. That's right. I'm happy to help anytime. All right. Well, Adam, this has definitely been great. I love getting your perspective because the conversations that you're having with your customers are very, very different than the conversations that we're having. I mean, our customers a lot of them are financial advisors. So, right. You're the boots on the ground, right? So I love hearing what you're hearing from customers. Are they getting a little more optimistic?
I think so. Yeah.
Not too optimistic or not quite?
There was one that got a little bit too optimistic and went from being terrified. In fact, it's one of these clients that complained about the politics, terrified of what's going on in the political realm, terrified of what's going on in Washington and what's going to happen. Is the country going to go down the tubes? And I want to make sure I'm not losing money. They're in they own 2 of our portfolio models, and there are 2 most conservative portfolio models that I manage. And then literally 4 months later, so we'll call it April, May, get a phone call from the same person, and she's like, hey, why am I not making more money? I'm like, well, first of all, at the time, a lot of the stocks that are going up that are making the market go up are, a group of say 20 or so stocks if you really kind of narrowed it down. And she says, well, we should own those. And I said, well, we do own some of those, but you have to understand your portfolio is we can't get more than 45% heavy in equities. So you're not going to see the kind of gains off the bottom that somebody would in say an aggressive or a moderate growth portfolio. And that's so yes, that sometimes people get irrationally, the pendulum swings much faster than you think it would sometimes, I think. But we just had a discussion about it.
Try to stay more balanced. The extremes in both directions. It's not worth it. Tell me, man. All right, Adam, you're the man. Thanks for coming by.
Thank you,
Adam.
We'll see you.
All right.
Just a great reminder for everybody. Turn the TV off. They're not there to help you. They have no interest in helping your portfolio. They have no interest in giving you the right news that they think that you need to hear. They have one goal and one goal alone, and is to drive traffic and get you to keep consuming their traffic and their content so that they can sell their precious ads to the sponsors that they whore themselves out to. That's their only goal. They're not there to help you. They're there to purposely hurt you. It's malicious. They're not there to help.
I would agree and disagree. I think I think they do want to show you the right news, with the caveat that the right news also keeps your attention in the never-ending loop of attention economy, right? So,
I've been doing live television
Yeah.
for 15 years on every single network you can imagine. No one there is trying to help you, Spencer.
all right, fair enough. Okay, it's 9:12 here. We're gonna have Kimmy hop on in a second. Let's talk some individual names here. Saw someone in chat mentioning Coinbase. I don't know if we have a chart for it, but Coinbase just got futures approval from the National Futures Association, so they're going to be able to. You're going to be able to actually buy and sell Bitcoin futures on Coinbase, which you couldn't do before. So that's the news there.
Why was Coinbase moving?
National Futures Association gave them approval to offer Bitcoin futures on the platform.
Wow, that's cool.
It's not really a big move here pre-market though.
No. I'm just saying because that's how I mentioned in chat.
You don't think 5% is a big move pre-market?
It's nothing for the stock. I'm looking at a one-day rate.
Right, but weren't we just yesterday talking about how Bitcoin is like the most boring ever, and now you're getting a 5% move? I mean,
5% on Coinbase is not a big move. 5% on Coke, on the other hand, now we're talking.
Right.
But,
Stand corrected.
all right.
But really, keep an eye on it though, right? Because it's going to run right back into those pivot highs from Q1 around $85, $84. So that'll be interesting to see.
But it held support where it needed to.
Yeah,
at least so far this morning.
I mean, it overshot it a bit, right?
Fine.
Bucks.
Doesn't crypto tend to do that, Strazza?
Yeah.
You always say it yourself.
Yes.
So we're going to take some questions from the chat.
That was amazing. On that interview, you were literally like, "Hey, I never get to let Strazza ask a question." Then you let me ask a question, and then you didn't even let him answer it. Did you notice that, Spencer?
I wasn't going to say anything, but I did notice that.
I let you think that I'm giving you a chance to ask a question, right?
Oh, man,
it's a psychological game. So we got So JC's here to tell the truth, but you are here to help me, though, right, guys? No, just to be clear, I'm not here to help anybody. I honestly, from the bottom of my heart, couldn't care less what anybody here listening does with their portfolio. Doesn't matter to me at all.
Ooh.
I will happily tell you what we're doing. I will happily share the conversation and the charts with you guys, but you guys got to do what you got to do. I'm not here to help anybody, to be clear. And somebody else is talking about how in social media, it's the same thing. Yes. In social media, no one's there to help you, right? It just so happens that I help myself in sharing my thoughts, getting feedback from the community. It's helped me make great friends over the last 15 years. So I am happy to share. And if many people around the world tend to find that helpful, which as it turns out they do, then great, right? Fantastic. Happy to help. But just understand that those are not the intentions. My true intentions are just to share my thoughts with the world. It's very therapeutic. Writing every single day helps me tremendously. The fact that other people around the world can read that and it helps them, that's fantastic. But it starts with numero uno. It's very therapeutic. And, Strazza writes every single day. He'll tell you the same thing. In fact, go ask people who write every single day. They will all tell you how helpful it is. And I encourage all of you to do the same.
Yep. One of the best ways to kind of organize your thoughts, right?
Yeah. And it forces you, because if you're going to put things down on paper, literally, you have to think things through to be able to write it down. So it really forces you. And I've talked to a lot of people who manage portfolios. These are hedge fund managers, traders, financial advisors that didn't write. And I've convinced them to start writing. And they are very, very thankful for that. So to a T.
I think it makes you a better investor or trader.
100%. And by the way, blogs might be something new. I guess they're not new anymore, but they're relatively new. But journals have existed, and kings and philosophers have been writing journals for centuries. We just call it something different now. So it's all the same thing. So this has been a thing for a long, long, long time.
Sure.
I do wonder if Kimmy keeps a trading journal. You know what? Let's find out. Let's ask her. She's here right now.
Kimmy.
Good morning.
Good
Hi.
morning, sunshine.
Kimmy, do you keep a journal?
I do not.
All right.
Her journal is
it's
ticker
all
symbols and
documented.
numbers.
What?
Ticker symbols and numbers, right?
Ticker symbols, numbers, and it's all documented, so I could always go back to my TD Ameritrade, which I trade through. So everything's documented there, so I could always look back. A lot of traders do keep journals, and I think it's great. You could put a spreadsheet together of wins and losses and how you do in certain stocks and how your performance is, because typically I think over time you kind of trade within the same universe. So you know, you kind of trade in the same stock. Sometimes you add a couple of different ones in, but you kind of hit around the same area, and you can see how you do in those stocks, and your performance is in those stocks. Like, I've been trading for a long time, so I kind of know how I do in certain stocks in certain areas. And I go back and look and pull up. Let's say I trade VLO a lot, right? I'll trade BABA a lot. I'll trade Amazon and Google's a lot throughout the year. So I see how my hit rate is on those names, and I just see how I do.
I mean, how big you think your list is? Your universe of your friends, as you call them. How big of a list? 130, 140?
Well, I really way smaller, probably like
Under
I was
100?
just like 20 or 30.
Yeah,
No, it's way more than that.
it's around 50, but so what I do is, like, my screen that people could see is that, like, I have my top 10 up top, and then I have a whole universe down below, but I search through them every day, and then I move them up when they become more of interest. And then sometimes I have alert go off that it triggers. Like, sometimes alert goes off. I was waiting for a certain name to go to a certain level, and then all of a sudden it triggers, but it wasn't wasn't grabbing my attention in the morning. It might grab it in the afternoon, right? Or it might grab it sometime during the day, but every day I scroll through my names and see, and then I push them up higher, so it's on my focal view to see if it's an opportunity in a name.
All right, so let's review yesterday. Shorted Morgan Stanley for a profit, bought UPST for a profit, bought SE for a profit after getting slaughtered yesterday. Great example of Kimmy going counter trend. We were talking about SC on the show yesterday, getting slaughtered. Shorted Eli Lilly for a profit, Qualcomm short for a profit, bought Merck for a profit, shorted Microsoft for a small loss there. Not the end of the world, couple points. I was less than 1%. So all in all, great day. And interesting that Kimmy is looking at Target this morning. Seems like Target is all the rage here between Spencer and Kimmy. Talk to me. What's going on?
We hadn't even gotten to it yet.
Well, we'll see. It's really stuck. I need this name above one. We've traded it when it popped up to 138. Like, I think a couple of weeks back, we did trade this name back then. So it's really, really stuck. So I really need to see this name rip up past 135 and continue going. Otherwise, I have no interest in it.
Can you throw up slide 1 there quick so people can see what she's referencing here? So this is a longer term chart of Target. It's up 7%, which puts it above 133. What was the number that you said you needed to see it hold above?
135 to 135.50 or so. It's got to really push. It might not. It could fail and pull back down, down into 125 area. We'll see. Some people might sell into this morning, Yeah,
140 is the big one for me, because that 140 would put us back above all that former support. So
right.
Interesting from two different time horizons, you from an intraday perspective, me from a bigger picture perspective. You're looking at that 135 to 140 as a trade. I'm looking for a breakout above 140 for a trade. So no wrong way to do it.
Kimmy, how much weight do you put into the pre-market price action?
I do, because, I write my note early, like 7 a.m, and then sometimes my recommendations don't even make sense by 9:15 or 9 o'clock, because sometimes you get data at 8:30. Sometimes the market moves. Sometimes it pulled.
Well, I'm talking about, like, say, like Target specifically today, right? So the fact that, for example, this thing almost got to 140, but that was 3 hours ago now. It's been trading down for 3 hours.
Correct. Right. So I look to see where it was at like 7 a.m. and 6 a.m.
Yeah.
And I look to that, and I see it has pulled in. It was up at 135, like you said, 140. So now I'll watch. Now we got to see how they trade them, if people slam it or pop it, if anyone has an interest or not. Also, I just want to make a reference real quick in my morning note that people know my afternoon note goes out to subscribers, correct?
Yes.
Yeah.
Okay. So now the 2 trades. So people asked me to put them in there, Qualcomm and Merck. I only made a penny, so it's not really a win. Okay, it is a win. It's not a loss. I only made a penny in that. I typically don't put those in my afternoon note. I list my winnings and losers. So I put Merck in there, only made a penny, and Qualcomm on the short side. I did eventually hit my target, but I only made 20 cents in it. I don't put those in there because they're not decent sized wins, right? I don't normally do, but people ask me, say, can you put them in there so they could go back and look to see if I'm still in the name, not in the name, which I list on the bottom what I'm in, not in, but maybe someone missed it. So I'll put them in there, but I'll put them lower because they're not really, they're not lost.
Yep. Not notable. Yep.
By the way, for me, there's 4 possible outcomes to a trade. You can make a lot of money, which is great. You can make a little bit of money, which is fine. You can lose a little bit of money, which is fine. Or you could lose a lot of money. I consider any of those 3 a win. It's the losing a lot of money. As long as you avoid that. If I lose a little bit of money on a trade, I take that as a win. If I make a little bit of money as a trade, I take that as a win. And sometimes you're going to get lucky and you're going to make a lot of money. But it's avoiding that 4th, losing a lot of money. If you avoid that, you're going to make money for the rest of your life.
Exactly. That's why I always say people keep your stock, especially right now. The market's very volatile. Like really, we pulled in, the SPY's closed its gap lower. We have to see if we hold on or do we pull even lower. We're getting at a point where we're kind of getting a little bit oversold, but we could stay oversold and become more oversold. Now it's like, which way? Like yesterday, it was like pulling teeth. I had trades. We did trades. We had nice 4 winners there or 3 winners. And it's just like, it was like pulling teeth. The market's not really, it's down, but now is it going to stay down? We've been down almost like 2 weeks now. Right. So have to see, big monthly expiration options on Friday. So, they could keep it lower until then, and then maybe mid-month we get it out.
I like it.
All right. Kimmy's going to go in her room right now. If you want to join it, she's there every single day, trading, calling out her trades, showing her screen, showing her charts. What she's seeing is what you're seeing as well. Check it out. The link is on the screen. The link is in the chat. Link is in the description. Kimmy, go get it.
Go get him, Tiger. Keep up the good work.
All right. So speaking of Target,
great example, by the way, Spencer, on the SE. We were talking about, we were hating on this thing yesterday because this thing was getting absolutely slaughtered. This is the C Limited. And she made a profitable trade counter to that gap down. So just, a classic Kimmy right there. Great example.
Hey, if you ain't fading, you ain't trading. All right, let's
is
go
that what they
to.
say?
That's what they say. Yeah, since we mentioned Target, let's go to the earnings here. Here's the calendar for the week. Target is sort of the big one here in the session this morning. So let's go to that chart now. As we said, the stock is trading up this morning. It is off its highs, but it is still higher, which is interesting, especially looking at the numbers here. Their earnings for last quarter were fine. The sales was a little bit light, but then the guidance was the real issue here. The guidance, they actually lowered their earnings per share guidance for the year, and they said that their same-store sales for the month of June and July also down year over year. I think a lot of that is coming from just they had strong comparables from a year ago, a tough bar to clear. Anyway, they lower the guidance is the big headline here. This also caught my eye. This is making the rounds this morning. On the conference call, the CEO said that in the first 5 months of the year, they saw a 120% increase in theft incidents in their stores. So I guess people are stealing from Target. But anyway,
so fun fact, did you know, Spencer Israel or Strazza, that Target was founded in 1902?
Oh my God.
I did not know that.
I would have taken the over.
Yeah.
Right? Strazza, 1902? I didn't know that.
No, but I have no idea. This theft thing they've been complaining about
yes,
for years now.
True, correct.
I don't know. I don't buy it. seems like an
Yeah, it seems like a lame excuse.
I don't know.
Yeah.
Seems like a
Maybe
lame.
buy some.
Your stock doesn't
maybe-
suck because people are stealing
Right,
stuff. Your stock sucks because your company sucks.
That's
Hire some security guards.
listen,
I don't know.
theft at a store like that is ordinary course of business stuff. I don't need to hear about it. Right?
No, Strazza, isn't there like an accounting thing for this sort of thing? How does one account for
Absolutely.
that?
Yeah.
E&O? Is that how does that work?
They'll make an allowance, I would imagine. I never audited consumer companies.
You were
No.
more on the financials.
Only. Yeah.
So you know all the fun facts about those shady hedge fund. I mean, not that so much shady. They're just they're walking a fine line, right? Is that what it is?
Yeah.
That's the goal. And then shout out Larry the Legend, Larry Thompson coming in with the Jack Schwager book that I couldn't remember off the top of my head. Market Sense and Nonsense. I was way off. What did I say? Market up and down. I knew there was an and in there.
That's close. And you know what? I have credit for that one. That was
All
close.
right. Market Sense and Nonsense. I don't like most of the book, but there's like 3 chapters in there that really dive into the efficient market hypothesis and all that other bullshit. You know, kind of just abusing it. Like, dude, this guy goes off, like abusing anybody who thinks that markets are efficient and the random walk theory and all that stuff. Just like rips them. It's great. Highly recommend.
Okay, back to the earnings. Let's rip through these. We have TJX companies, owners of TJ Maxx reporting this morning. Stocks up 3% in the pre-market, which is about to end here because it's almost 9:30. EPS beat, sales beat, comps were up year over year, and it looks like they raised their guidance. So Target lowered their guidance, TJX raised their guidance.
TJ Maxx is built differently. It's these guys are they're kind of like Home Depot in that way, where secular leader, they always seem to be beating and raising. Really strong fundamental company.
Morgan loves TJ, hates Target, my wife. So that's my fundamental analysis. And clearly, shareholders agree, hates Target, my wife, loves TJ Maxx and Home Goods, right? Home Goods is also owned by TJ. In fact, we got one by us like 10 minutes away where the TJ Maxx and the Home Goods is like in the same store.
Oh, that's really cool.
I didn't know that.
I think they have 2 different doors to go in, but there's there's no wall in between them or something like that. I haven't been in, but I hear things.
They own Marshalls also.
Right, Marshalls. Yeah.
It's a different kind of shopping, right? Morgan could probably speak to this pretty well. Like you're like hunting for stuff at Marshalls and TJ Maxx. They have nicer clothes for better prices than a place like Target, but you got to really look for them.
I don't go into any of these stores. I hope I never go into any of these stores ever. I don't think I've never been in the Target. I'm trying to wonder. I wonder if I've ever been to a TJ Maxx. I don't know that I've ever been in any of these stores.
Simply due to the lack of options for me, I go to the TJ Maxx down here.
I used to go to Bed Bath & Beyond back in the day when I lived in the city. There was a Bed Bath & Beyond a few blocks away from my house. I was there a lot.
They don't sell.
I don't think it's there anymore.
They don't sell clothes, so
they don't sell clothes. Well, for me, all these stores are kind of like in the same world of places that I don't go into. So the fact that I used to hang out at Bed Bath & Beyond back in the day, I don't know.
Things that JC doesn't do.
Yeah. All right. Let's hear JD.com reported they're down this morning, although trying to central bank just lowered rates. So maybe that's having more of an effect here.
They hiked rates.
I'm sorry, hiked rates. Yeah, what did I say? Lowered rates. They hiked rates. Earnings per share beat, sales beat. And we're open down 3%, almost 4% in JD.
Wow.
All right, so market's opening up. We're going to try to do a better job around here in the morning show to talk about what the market is doing live at the open. The Dow is flat. S&Ps are flat. NASDAQ down 15, 20 bips. No big deal. Interest rates inching up with 30-year bonds down 20 basis points. Gold is flat. Silver flat. Copper flat, oil pretty much flat, ticking up a little bit, dollar flat. You want to talk about a nothing burger this morning? This is it. There ain't nothing happening.
If people want more of this kind of stuff, I think, it's fine to mention it at the open, but you got to let things kind of shake out.
Let them dance. But listen, it hasn't done much in the last 10 minutes, but I think during the show, we should talk about what the market is doing. No?
No, I agree, but I'm just saying you got to give it 5-10 minutes let things shake out at the open. Then we can go and like dive into the sectors.
Got it. So you're saying that at the open, we shouldn't talk about what the market is doing. We should wait 5 minutes.
Yeah. Then give it a deeper look.
I think it's worth a mention of where we're opening. We're opening up, we're opening down, but then we can wait, and then we can let
anybody in the chat. When do you think is when is the best? For the record, the best time changes every day, right? So, you got some like, Fugazi jobless claims report at 8:30 one day. And then you got one of the PIs, whether it's the PP or the CP, right? One of the PIs, there's always something, right? And the Powell speaking, and then the minutes, and then the thing, right?
All right. We got a lot still to get to on our list, and we have Mary coming up here. So let's just go back to the earnings here. I got a couple. Big loser of the day is Coherent, COHR, down 25%. At least it was last I checked. The earnings were out this morning, and their guidance was bad. So
big news says who? I never heard of this stuff.
Coherent,
I never heard of it, but
so this is a $5 billion scientific and technical instruments based out of Saxonburg, Pennsylvania. I don't know where Saxonburg, Pennsylvania is. It is apparently north of Pittsburgh. Pittsburgh, great town.
Yeah, so they gave light Q1 and light full year guidance. So that's what's dropping that stock this morning again, down 25%, or at least it was last I checked. And the last one, first.
Hold on.
Yeah.
Look at those 2018 highs, guys. We've been referencing the early 2018 highs in individual stocks and indexes and sector ETFs probably since early 2018, right, Strazza? Those levels continue to play out again, not just in America, but globally. My understanding, something about like a China trade war or something like that, is what the gossip columnists have decided amongst themselves. That is why equities peaked in 2018. The reason is not relevant, but go chart by chart. You're going to see so much resistance in those early 2018 levels. And this is what we're 5.5 years from that, more. And here they are running into resistance at those levels. So this is just one example of like a zillion. Keep those early 2018 highs as a reference point. They keep coming into play.
And for like many different asset classes also, right?
Yeah. True. Good point.
Currencies.
Yeah.
Bitcoin, Ethereum. Yeah, sorry.
Yeah. Okay, last one here. First earnings report as a public company. Kava, they're out with their earnings last night. EPS beat, sales beat, same store sales guidance. They see it up 13 to 15% year over year for the current quarter. And look at that.
Has anyone eaten here?
Spencer went.
Yes,
he didn't like it.
I went about I don't know 3 weeks ago. And
where'd you go, by the way? Where'd you go?
What do you mean where'd I go?
Where was this Kava? Was it in New York City? Was it in Afghanistan?
It was in Paramus, New Jersey, I think.
Paramus, New Jersey.
Or Hackensack. I don't know. I don't even know where it was. So somewhere around there. I think Paramus. Anyway,
do you wish you got a pizza or perhaps Taylor ham, egg, and cheese instead?
Would have been better, yeah. I mean, it wasn't bad. The food wasn't. It just wasn't. I don't know. It was fine. It was fine. It just,
is it like Chipotle? How like for Mexican food, Chipotle sucks, but like in general, like it's okay, it's fine, right? Is this one of those things where like for Greek food, it sucks, but like it's okay?
Yeah. If I wanted Greek food, I would certainly not go to Kava for it, right?
Okay. And here's the thing: who's eating like Greek fast? Who's eating this type of a cuisine more than once a week? Like, say you're going out for lunch in the city. Are you really like when Chipotle caught on? Like I knew people who I was working with who were going there like every day, every other day.
Well,
we used to fax in our orders. This is a true story. Right. I'm aging myself. I swear, the sales assistants at our firm would walk around getting everybody's order and would fax in the order, and then one of them would go pick it up. Isn't that crazy?
Shake Shack was a big deal too when they came out. Like my buddies were eating there like a couple times a week for lunch. When we were working, I don't see anybody going for this Greek food, spicy, strong flavors more than once a week.
They do have strong flavors. Definitely
Do
can
they?
attest. Yes, definitely can attest
'Cause
to
Greek
that.
food tends to be more mild.
Well, it's not Greek per se. It's just it's Mediterranean more broadly, right? So
Eastern Mediterranean.
yeah. It's definitely not. I wouldn't say it's Greek food at all. It's Mediterranean, and
Do they have octopus there?
I don't
And
remember.
pulpo? Probably not.
Probably not.
I doubt it.
No.
All right, I gotta go check it out. I'm probably not going to, but
So
Again,
if I'm trying to-
Spencer,
Yes.
talk to me. Why did we not cover this new Vietnamese EV makers?
Oh,
Here we
yeah.
go.
We
Here
can.
we go.
We-
Here
we-
we go. Strazza goes to Vietnam once. He thinks it's the greatest country in the world.
We can. I'll be honest. I thought we were past this. And when I say we, I mean everybody. I thought we were past this whole EV SPAC.
Hold on, tell me. I don't know what you guys are talking about.
Okay.
Fill me in.
Okay. There was a
Come on,
SPAC.
Daddy.
There was a SPAC merger that completed the other day. The ticker here was VFS. It's VinFast Auto. The SPAC merger valued the company at what, $23 billion, and after day one of trade,
Yeah.
what?
It seems high, but go on. Yeah.
So 23 billion is what the SPAC valuation was. After day one, this thing was at 86 billion. Of course, it's down 30% this morning, but ipso facto. Anyway, this is a company that does. They started off doing scooters, like in Vietnam, like electric scooters, and now I guess they do cars. They delivered a whopping 40. What was the number? It was 40 something. It was in the 40s. 43 vehicles recently to the US. So they're doing it, guys.
Wait, but they're delivering vehicles in Vietnam. No?
They're based in Singapore.
Yeah,
Yeah,
they're
that's
Vietnamese.
normal.
It's a Vietnamese company.
Wait, what?
No,
Do Vietnamese companies are they not headquartered in Vietnam? Why do they have to be in Singapore?
But hold on. My question, and I'm going to look into it, but if you guys know, that would be great. Are they selling cars in Southeast Asia, or are they trying to sell cars here in the United States?
They
Selling cars over there first and trying to grow here.
Yeah, they just entered the U.S. market. They delivered 45 cars in March in the U.S. But again, this is like a 5-year-old company, so they were delivering. They were doing scooters before, so they were doing scooters in Vietnam. I don't know off the top of my head what their car delivery in Vietnam situation is, but that's that. So anyway, VFS.
We'll look into it. Yeah.
High flyer. Watch out, down 30% today. So
Can we get to the hot corner? We got some trades going on.
yeah, and then we'll bring Mary on. We're running behind here this morning.
Yeah.
So let's
get
do
to
hot
the
corner.
hot corner. This is big. You could bring in Mary for the hot corner. She's
I'll be
usually into it.
fast. Let's do it.
Let's do it. Get in this. Get
right.
this hot corner going.
So hot right now.
Wow, where do we start with today's? Can you just throw it up? Throw up today's hot corner just so you can see the length of today's scan. Look at that. Wow. So many trades, so much action. People are talking about August is slow.
And
Not this year.
excuse me, sir. I got a DM last night. We stopped including the political filings. No, they're just, the problem is most of them are either not even in stocks, right? These political filings, right? They're doing stuff in the bond market, or they're penny stocks or funds, so we're not including them for that reason, or they're just too small, right? Like, I think that was like Human Sight, which was a micro cap anyway. But he was buying like $45,000 of it or $50,000 of it.
All right, all good. But with Tommy Tubbs getting involved here, Cleveland Cliffs.
He's
Tommy
out
Tuberville, very active.
again in the Cleveland Cliffs. U.S. Steel hasn't had this good of a week in like almost 10 years. So a lot going on with these steel makers right now. He's been long Cleveland Cliffs though, as you know, right? He's been buying this one for years now, been in it, buying more. So obviously still likes it. The one that really stood out most to me was probably Lyft, CEO and director, right? We talk about how this company is clearly doing something wrong based on their stock chart. but the CEO would know better than anybody, and he's out there buying stock. And is that big enough? Is that the right kind of size for you? 1.2 million combined.
1.2 million. I mean, it depends on his net worth. I mean, generally speaking, 1.2 million is not. I wouldn't classify that as a piker purchase at first glance.
Yeah.
A $1.2 million, that's legit. 7 figures. I don't have a problem with that. What about this Celebra Capital filing a Form 4 on PI?
Yeah.
That doesn't excite you? I think that's an interesting one.
Why? Just because of the amount, 15 mil? Yeah.
It's not nothing.
No.
The stock itself, we're looking at a $1.6 billion tech stock.
Yeah, but listen, these are typically, monster funds with, tens of billions in AUM, 15 million in Form 4. I'd rather see a CFO or CEO buying, right? Like if you're an institution, come buy 10, 15%, put some size into the stock. If you're a CFO, CEO, 15 million would really stand out. Right.
What about this William Haslam? No relation to Udonis Haslam. Buying this hotel motel REIT, RHP.
Mm-hmm.
Not
a bad chart. It looks dead. It just ran into these former highs and it's just been, flatlining sideways for the past few years now.
He's a 4.5% yield based out of Nashville, Tennessee. Look at this consolidation. I mean, you're right. It looks like it got acquired like 2 years ago.
Interesting though, right? Because a lot of REITs don't look this good. Not many REITs are trading back at their old highs like this. So kind of like this one. We'll probably put a trade on this one.
And then who is this guy? This William Haslam guy? William E. Haslam.
Wait, any relation to the owners of the Browns, the Haslams, Jimmy?
No idea.
I don't know, but he's a billionaire. And he was a former governor of the state of Tennessee. But he's a billionaire. So the fact that he's only dropping $1 million on this, I'm less excited about it.
See, I'm not going and Googling these guys' names.
I'm curious, but listen, the guy's worth $1 billion. Pony up a little more, William. Come on, Billy. Step up your game. Yeah, 4.6% dividend. A lot of relative strength. People are talking about like the housing REITs, like stay away from the housing REITs, but these hotel, motel, Holiday Inns, these, maybe some of the office REITs, some of the, like science lab REITs are interesting as well. They got those.
Data center, cell tower.
Well, those are the best ones.
Historically, not so much.
These days they have been, right?
No.
So tell everybody where they can get the old hot corner there.
Yeah. Tomorrow is when I'll have your page for you. But in the meantime, email me questions at stockmarketmedia.com and I'll get you. Just put a hot corner in the subject and I'll get you on the list there for the hot corner. Goes at every single day, compiling all the biggest trades from Washington to Wall Street to the boardrooms. Check it out. All right. Time for our new segment that we are calling Mornings with Mary. Got a nice little bumper here. I don't know if we've ever played it before.
I missed all this while I was gone. This is my first morning with Mary.
Oh, it's only our second, I think. So
let's go.
Yeah, it's only a second.
Wow. Very loud bumper there.
That was way too loud. I'm sorry, guys.
It's really loud.
That blew my ears out.
It's great.
Mornings with Mary. Mary, look lovely this morning. Always happy to have you on. For those people wondering, who is Mary? Who is Mary? This infamous Mary. Mary is our customer service legend. Answering all of the questions that anybody has for any product that we have. And Mary does a really good job of that for the very simple reason that Mary is a power user of All-Star Charge for many years and other products in stock market media as well at this point.
Yeah, absolutely.
And awesome low-key trader. Right, Mary? Mary gets
I don't know
involved.
about low key per se. You guys
DL
have termed me as a
junkie.
junkie. Yeah. There you go.
Donkey DL, like DMing me about like these like, you know, small caps. I'm like, all right, Mary, I see you. All right.
Oh yeah.
So what are we trading these days, Mary?
Yeah, Mary, what do you like?
Well, so obviously I listen to the morning show every day, and you've been listening to you guys talking about how things are kind of cooling off, seasonality. We're seeing it in the indices. So in the last couple of weeks, I've been taking some positions off, preserving some gains, and I've kind of been sitting on my hands a lot more in the last week or two, just because kind of watching to see what happens. Still very closely watching Bitcoin to see how that resolves. But while this has been going on, I have been looking at our chart report, total access, private access. We have a screen or a scan that we do there called the Buzz. And what I specifically like about this scan for right now is it's taking all of this unusual social media activity, and we're applying our technical analysis to it and finding trade ideas that are pertinent for the very moment, this very day. And so one that I am watching very closely from our most recent scan is Vishay. I'm not sure if I'm saying that correctly, but VSH, it's a semi, $3.7 billion company. And what I like about this one, we were just mentioning the 2018 highs, also again in 2021. And we are back now, we're above that resistance, had a little breakout. We've come back down to retest. And I think as long as we hold this 26, maybe even give it a little bit of more wiggle room, that semiconductor sphere has been so powerful. NVIDIA continues to be on its tear. And I like this one. So I've taken a little nibble on that one, again, coming from the Buzz, just because it's had a lot of unusual social activity mentions on social media. And I figure if people are talking about it, something might happen. And so I like this one. I'm in it, going to maybe take a bit more bigger position, depending on how things go here. But I think it looks good.
Look at Mary. I like it, Mary. Bring it. I hadn't even noticed this one. Nice base, nice space.
Well, I got to give Patrick credit for that one.
She's always bringing
Patrick credit.
Always bringing great charts. And this is why the Buzz is so cool, right? I love the way the scan is designed. I've never heard of this name, right? There's a ton of stocks out there. Look at this monster base. It's been trying to break out above these 2018 highs for a couple years now. Finally doing it, textbook retest. Really nice level to enter at. And, social media mentions are great, but more importantly, beautiful chart, textbook breakout, strong stock in a really strong group.
Yeah, absolutely.
$4 billion. It's tiny little semi based in my backyard, about 45 minutes away. Who knew?
Oh,
what are you talking about? Ron saying VSH is mostly a hold. This is a buy. I mean, you got a beautiful level here to define your risk at. You're going to know right away if you're wrong. Lose a couple pennies maybe. Paying
1.5% dividend, getting paid a little to play.
It's a multi-year structure, right? So you tend to get a pretty nice leg higher out of these kinds of bases.
Interesting. I like this. And while we have Mary, Spencer, you want to run through the chart report while we're on the subject?
Yeah, we can do that. I got to get my my TCR bumper queued up.
So this one coming from the chart report. I like it. I like it.
Yeah, there's actually another one, a great one in aerospace and defense that is.
Let's hear it. I want to hear it.
I can't give away all of Patrick's information.
No, do it.
Oh my God! All right, call Mary for it.
Give me a call. I'll give you that one too.
Okay.
Okay, chart report. Let's do that.
Do it. Well, first of all, make sure to watch that video with JC O'Hara, great technician that Patrick had on the YouTube show. So definitely check that out. Punch it up so that people can see the trend lines over headlines.
Right there.
JC O'Hara. Shout out JC O'Hara. Great name.
He's gonna come on this show. If I haven't emailed him, it's on my list. So
yeah. Get JC on here. Yeah. So many JCs. You thought one was enough.
Too many. Okay. Theme of the day in the chart report yesterday was a lot about REITs and real estate, right?
Yeah.
So there was this post about I thought there was a link to real estate. Maybe there wasn't, but there was several charts about real estate here. I wanted to find them. I have to scroll a little bit. That wasn't it. No.
You
Am I
know,
on the right day?
we were talking about home builders on Spaces yesterday. The way that home builders are correcting, JC, take a look at like ITB.
Yep.
Super constructive. As constructive as any group out there right now. Just real high and tight, right at these former highs. This group looks really good still. So be careful about these bearish headlines.
My fault. I was on the wrong day, so that would explain why I wasn't seeing what I thought I was seeing.
Well, I'm looking at yesterday's.
Yeah.
What do we got?
Ryan was
Richard
the part of the
Wyckoff.
day, wasn't he?
I like the quote of the day. Quote of the day: listen to what the market is saying about others, not what others are saying about the market. Richard Wyckoff. Nice quote there, Patrick.
That's good. I've never heard that. It's a good one.
Also, Ryan Dietrich with the chart of the day. Why don't you throw that one up? Ryan Dietrich with the chart of the day, talking about the seasonality, the seasonal weakness. This coming from one of the biggest bulls on the street over the last year. Talking about, from a seasonal perspective, it's a normal time for the market to take a breather. Obviously, we agree. We've been saying the exact same thing. We're looking at the same data. So I think, again, perfectly normal for the churn that we're seeing in the markets, for sure.
I wanted to find these REIT tweets.
Russo all the way at the end.
There was a couple of them.
Yeah, Russo on also. I've been asking Dan to come on. He's been playing hard to get with us, but he'll be on soon.
Oh yeah,
Russo
this
at the
one.
end, and also bar chart with the Bank of America sentiment survey there.
Oh yeah. Oh.
Good.
Fund managers very bearish of REITs, so that catches my attention.
Yeah. Well, I mean, there's a reason they're bearish, right? I mean, look at
and then Russo real estate, right? Exactly. Real estate. A few weeks ago, the magazine cover crowd was saying this was interesting. What am I missing? Was there a magazine cover, a REITs magazine cover last week?
No, I think he's referring to that big old article about like the death of commercial real estate in New York.
The one with New York City.
Yeah, I read that. It was good.
The article? You read the whole article?
Yeah, it was long, but it was really good. I enjoyed it.
Sounds like you have too much time on your hands.
Well, that's kind of par for the course for the New Yorker or whatever magazine I was reading. I don't know. But anyway, guys, get the chart report. It's a free daily note. Goes out every single day in your inbox in the evening. Link is on the bottom of the screen. Link is in the description. Check it out. It's fantastic. Okay.
And then what about Call Mary? How do people reach Mary if they're interested in that second name that she didn't want to mention?
I'm glad you asked that question.
People were saying on the chat that you're such a tease, Mary.
That's funny.
I'm glad you asked that question. There is the number to call Mary. If you're wondering who the heck is Mary, why should I call her Mary? We call her our member concierge is what we say, and she has all the questions about any time if you've ever heard us mention a product or a service on this show in any context, she has all the answers about that. So if you have a question about it, give her a call, 323-421-7910. Number is on the bottom of the screen there. The number is also in the description on YouTube, right? Yes, it is in there. You just got to scroll down a little bit to find it, but it's there. 323-421-7910. Call Mary. And yeah, sometimes she likes to just give away our paid stuff for free if people call her. So
it's nice like that. She's nice. She's a G. Mary, you sticking around for recess?
Yeah, absolutely. Why not? Just don't call me right now.
Yeah, don't call her now. Yeah.
Well, call her now. Leave a message. She'll get back to you.
That could work.
She kind of can't talk to you and us at the same time. She's not that good, but okay. Where's my recess bumper? I'm doing too many things at once here. Here it is.
What up, Mary? You go first. What do you got today?
What do I got for recess? Well, so I've got kids going back to school, and from a week from yesterday. So I am bullish. All the things school. Back to school supplies,
Staple?
back to lunches. What's that?
Staples?
Bullish
That's where I used to go there for my back to school shopping.
Yep, exactly. Bullish Target for back to school supplies. Yeah. So
All right.
that's what has me consumed. That's why seasonality right now with the lull, it's been very helpful for me because I've been trying to get my kids ready for school and sports and all the
there
things.
you go.
So you've got that to look forward to,
Cool.
JC. It's coming.
What's
I know. I got orientation for pre-K next Tuesday.
What's the go-to retailer for back to school shopping these days?
Target, I would say, honestly. I think most towns have a Target. Locally, my big superstore here is Meijer in the Midwest in the Great Lakes. Speaking of which, Spencer, I feel like you have a vendetta against me because this is the second time now that I've been on the show and was preempted by a person from Ohio. I'm not sure what that's about.
Is that really? That's a total coincidence.
I can't remember who the gentleman was before, but the previous time.
It was Christian. I think it was Christian.
It may have been Ryan Dietrich also.
It's okay.
Mary,
they're Midwesterners. They're good people.
Mary, it's funny that you mentioned Meijer because I lived in Michigan for 7 years, and my wife and I talk about one of the things we miss about Michigan. That is like top 3 things I miss about Michigan. Meijer is in that top 3, no doubt. There is no equivalent to it here on the East Coast, where you go grocery shopping, maybe buy some clothes. Maybe it's like Walmart, but just way better.
It really is. Love my Meijer. In fact, I was there last night.
I'd like to see the stock there to see if it's better than Walmart. Tough to get better than that one.
I know Meijer is pretty good. So I do miss that. So that comes up sometimes. My recess is finally, after weeks and weeks of trying, finally saw Barbie last night. 7 out of 10. 7 out of 10. It was solid.
7 out of 10.
Okay.
You
there
were so bullish, Mattel. I can't believe it took you this long.
I know. I mean, there were several points where I felt like personally attacked. Like I thought they were talking about me in that's how close to home some of it hit. The general plot is that I'm not going to get into it, but it was a good movie.
Why is the Barbie story close to home for you?
So in the final third of the movie, there's like this war between the Barbies and the Kens, right? Not to give too much away, and the Barbies are game plan how do we combat the Kens and fight them without realizing that we're doing it, and there's all these references to just basically letting guys do what guys do, like explain the Godfather to you and talk about saving and investing and all these things that guys do, right? And I was like, damn, that hits close to home, right?
They got you. Yeah.
So
this one, I got a recess for you and me. I'll let you go, but I had tacos for dinner last night. And I made a ribeye for my wife, and my wife was like, "You're gonna have tacos, not the ribeye?" I'm like, "I love tacos. You can have the ribeye." And I made tacos, and I was perfectly happy. I was like, "Are you kidding me? You know how happy this makes me? You know what I'm looking forward to? I'm looking forward to introducing Louis to Mexicans and getting Louis some tacos."
Yeah.
Louis never met a Mexican, I don't think.
So where are we gonna go? Do you have a place in San Diego?
Well, we're gonna between San Diego, Orange County, and Los Angeles. If we can't find a good taco joint,
Tacos El Gordo,
we should just end it.
Tacos El Gordo.
We'll be fine. We'll be fine.
All right, can I go? I got a good one today.
That was a good one.
Great. No, I'm excited for that too. Can't wait to have some good tacos. Great article in the Wall Street Journal. They call it streamflation. Throw up slide 3. I don't know what your guys' situation is, okay? But I pay for Hulu, HBO Max, Netflix, Disney, Peacock, Paramount, everything in this chart. So that's like $80. On top of it, YouTube TV, which is like $60, but you need that for sports. I'm paying more money than I would be with cable. Is anybody else there? I mean,
you don't even have kids yet.
No. So my policy up until now has been like, if there's ever something I want to watch on one of these, I just pay for it. Like, we just get it. I haven't gone through and started cutting yet.
So yeah, I recommend.
What do you watch on Hulu, bro?
Nothing. Actually, Hulu I'm not paying for. It comes with my Disney.
Hulu's the most expensive one.
This
Strazza-
chart doesn't have Prime.
Right, because
doesn't
that's a
have Prime.
because that's a separate beast because you get more than
Well, right.
yeah.
But I mean,
But
you're still paying.
Everybody has Prime. Who
Right,
doesn't have
right.
Prime?
I don't have Prime.
I don't
course
have
you don't.
Prime.
Of course you don't, Spencer.
No, no,
It's not a
no.
separate price.
This is the point I was making. You have to be tactical with it. So I get Prime, and then I cancel Prime. And Strazza, just be more tactical with your streaming. Cancel and re-up. Cancel and re-up. Right?
You know what? You know what I would like to do? Here's the model, but it can't work right now because there's way too many of these apps. I could just go to pay-per-view, like full pay-per-view. If I want to watch something, I'll pay for it. But they got to like make those a la carte prices more reasonable.
Also, you should try downgrading to the ad tiers. I did that recently with Hulu, and it's, you know, saved a few.
I have ads with some of them. I think like
All right.
Peacock. Yeah.
Anyway,
Ads, get out of here.
But so anyway, the point is though, outside of my personal situation, which I'll have to figure out, these guys are raising prices like crazy.
they have to.
And like Netflix was like grandfathering people in to like some like low prices for a while. That's over. Like, these guys are all just hiking, and doesn't matter how long you've been paying them, prices are going up for you.
Yeah.
It is an interesting chart. I saw this chart actually on the stream yesterday. I was going to tweet it out, but I didn't want to be so obnoxious. I'm trying to be a nicer person.
It's a cyclical market.
People have way too much time on their hands. Like, who's watching all this shit?
Well,
Like, I
I
feel like
kids,
if
man.
I feel like the more hours you spend watching this garbage, the higher your tax rate should be, because you're just bringing nothing to the table.
I don't
in
have
this
kids.
society.
I don't have kids.
Higher taxes for people who watch more
All
of this
right.
garbage.
On that note, we're done. Thank you to our guests today, Adam Kosh, Kimmy, Sokoloff, and of course, Mary, our member concierge. Thanks to all of you for watching in the chat. Hey, hop on over to our website, stockmarketmedia.com. Watch the show there. I'm hanging out in that chat all day. Unlike the YouTube chat where I'm not in there all day, I'm actually in the Stock Market Media chat all day, just hanging out. And so if you drop me a message, I'll see it. Come say hi. Coming up, what's today? Wednesday. We have What the Fick at 11:30. Stay tuned for that with Ian Cully. And that's a wrap. Go make some money. I'll see you guys later.
Shout out, Mary.
Thanks, guys.
Adios.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground.